Welcome to Amazing World Channel.
KONGSAO Paulo Reuters Advisers to China's Sinopec have offered its oil assets in Argentina to about a dozen potential suitors, three sources familiar with the matter said, as losses and labor headaches prompt Asia's largest refiner to pull out. The Argentine oil and gas assets, mainly in the southern province of Santa Cruz, could be worth $750 million to $1 billion, one of the sources said. That would be less than half the $2.45 billion Sinopec paid in 2010 to buy the Argentine assets from US-based Occidental Petroleum Corporation, marking an aggressive drive to diversify its oil sources at the time. Reut.rs2's 20 prospective buyers for the assets, mainly large energy companies from the United States, Europe, Africa, and Latin America, include Angola's state oil company Sinopec and two Russian energy giants, including Rosneft, said two of the sources. Mexico's Vista Oil Gas has also expressed an interest, according to a separate source. One of the sources said there could be more than 15 prospective suitors. Argentina's Corporation America, which controls energy company Compañía General de Combustibles (CGC), decided it was no longer interested after studying some of the assets in Santa Cruz, spokeswoman Carolina Barras told Reuters. Sinopec is being advised by Scotia Waterhouse, a unit of Canada's Bank of Nova Scotia, which focuses on energy deals, two of the sources said. All the sources declined to be named as the sale plans are confidential. Sinopec and Sinopec did not respond to requests for comment. Asked about the sale and its interest, Rosneft said it was not able to confirm the information. Vista, Scotia Waterhouse and Argentina's energy ministry declined to comment. Boom, bust in 2010, when Sinopec bought the Argentine assets, China, the world's No.2 oil consumer, was scouting for natural resources to feed its surging economy. Worsening economic conditions and social unrest in Argentina, however, have weighed on the operation since then, Sinopec said in September last year. Argentina's president, Mauricio Macri, has made attracting energy investment a priority since he took office in 2015. His government said last month that it brokered a deal to calm labor conflicts in Santa Cruz and lower costs. But two sources said the Sinopec assets would be a tough sell regardless, given labor woes and declining oil output. Sinopec had already considering divesting the investment in 2015, sources told Reuters last year. It doesn't have to be fast, unless Sinopec is willing to lose a huge amount of money, said one source, referring to Sinopec's willingness to accept low bids. Based on a $60 per barrel crude price, Sinopec suffered losses of $2.5 billion on oil projects in Argentina by the end of 2015, Chinese publication KONGSAO reported last year, citing an internal audit report. Golfo San Jorge, around where the Sinopec assets are located, is an older area, said a different source familiar with the process. The Santa Cruz province recently auctioned off 4 areas, and 3 were won by locals ENIP, CGC and YPF. It's a tough sell, and soon there will be another offshore auction that might further reduce the attractiveness of Sinopec's wells. Reporting by Guillermo Parabernal, Julie Zhu and Ileana Rasuski. Additional reporting by Caroline Stauffer, Juliana Castilla, Kane Wu, Nicolas Miskulin, Isu Chen and Vladimir Soldatkin. Editing by Clara Ferreira Marcus, Himani Sarkar and David Gregorio. Standhardt Thomson. Reuters Trust Principles.